Praise God. Praise God. We give God thanks for his loving kindness. All right. I give you 2 minutes or a minute and a half to settle in. Then we begin. All right, let us bow our head in prayer. Oh, let me get a bottle of water, please. Once I'm talking, I have to have water.
And somewhat.
No, I said once I'm speaking, I have to have water. All right, let us bow our head in prayer as we thank you. You're a very good man. Eternal God and everlasting Father, we thank you for your loving kindness, your mercy, and your grace. Oh God, as you have been here with us from morning until now, oh Lord, you have called us, oh God, to have a complete life, but that life must be guided by honesty, integrity, and knowledge. Your word tells us that my people perish because of lack of knowledge. I ask you, God, as we discuss the affairs of our lives, oh God, in a holistic way, I beg you to be with us and guide us. In Jesus' name, amen. Praise God. I thank you for the opportunity, again, being here. We're going to have a conversation about credit. I do this seminar, different places and different churches, because the church need this information. The church need it. Your life is not just spiritual, but a matter of fact, the Bible doesn't even make a distinction between a spiritual life and a physical life. All your life is spiritual, because if you're doing business, you're supposed to behave a certain way. If you're on the job, you're supposed to behave a certain way. But there's a lot of information that's out there that we don't have that can help us. And the church need to make sure that the members are equipped. So part of my responsibility, anyone in the scripture knows about Bezalel? You ever hear that name before? Yes. Where we hear the name? Yeah, but where? What is he known for? Exodus 31. My son is named after him, but we changed the B to G, so that all the boys have a G name. So he's Bezalel. Why I bring him up? That man was a silversmith, a coppersmith, skillful in all kind of material. And when they were supposed to build a tabernacle, God told Moses that I have already prepared him. He's one of the persons that is mentioned in the Old Testament that is filled with the Spirit. So the Holy Spirit is not just a New Testament thing. And God said he was filled in order to do his work, to make money. So the Spirit don't just help you to dance in church. It give you wisdom. You're in the book of Jeremiah when the Lord tells Jeremiah to buy the land. So God give us advice. And the word warns us that my people perish because of, that's not just a spiritual thing. Anything you don't know, it works against you. So part of what I do, which we're not going to get deep into, because it's Sabbath hours, so I'm not going to discuss my business. I'm here just to give you information, just as how somebody would come here and basically tell you about your health or something like that. This is the other side of your life. So I'm not going to discuss business. I'm giving you information for you to learn and to make improvements in your life. After we are done, if you need anything from me, we can talk after sunset. All right? You text me. I will give you the info. You text me, and we can take it from there. If you ever need me, I'm not giving you this because I'm soliciting something. I am giving you this because you need it, because it's your freedom. When you understand this, people cannot take you for an idiot. As I tell the story, Thursday night I went to a church and did it with them. I don't just do it with our churches. Any church that need me, I go there. Was at the first day of church. I did 2 series with them. So today I will do part 1. You will need me back to do part 2 because I can't do all of the amount of information. Here, we're going to do the foundation and the fundamentals of your credit. The next time if you call me to come back, it's all up to you. I will show you how to build and structure your credit to have good credit. And show you exactly what you need to do. Credit is not magic. If you understand how it works, you can have good credit and control what your credit look like. So that will be part 2. This, I have to teach you the fundamentals so you know it. Because if you don't know it, it won't make sense to you if I tell you part 2. People have good credit and they have no idea why they have good credit. But so I'm going to give you the fundamentals. Went to buy a car this week for my company, and I'm just giving it. I'm not telling you my business. Anybody who know me know that I'm extremely private. But I realize that that is not sometimes helpful to the church. Sometimes you tell people things and it can't help them, because I have told people things years before, and they come back to me years later and I help them. They say, I remember you said this, and it changed their life. Went to buy a car. Saw the car for $17,000, right? Because it's a company car. I wanted to add to my company. By the time I get the paperwork, how much do you think the car is for? By the time I get the paperwork, $37,000. And I had to school them there and let them know that we're not playing that game. What you're doing is illegal, and if I want, I can take your car, give you the money, and come back, and you have to pay me twice what I paid for the car because you use deception to sell me. You understand? But when you don't know your right and know that sort of thing, you won't know. What they did, they advertised $17,000 online, and then when I go there, they keep moving up the money. So when I went there, let me just give you a quick run through so you kind of see the power of the knowledge, all right? And I'm not talking me, I'm talking about knowing your rights. So when I go there, the car is 17. By the time I get the paperwork, so when I see it online, I call him, I say, how is it that the car is now $20,000? Oh, that's what you will pay in the final payment. I say, okay, no problem. That's taxes and everything. Yes. So I said to him, what is it that we need to do? When I get there, they said, oh, when you come in. So when I get there, I said, okay, I fill out the paperwork. I said, go. How much you have to put down? So you can't ask me that. Go and tell me what the bank is giving me, and depending on how much the bank is financing it for, that determines if I will give you any money at all. I have bought car and walk away without spending $1. If you know you're right. Because what happened, he's not financing the deal. So he can't tell you to put down any money. The bank have to tell you that. Because it's the bank and you doing the financing. So I tell him, I said, go and get what the bank is telling you and then come back with the numbers. And when you come back, no, but we have to know. I said, bro, go and get the numbers and come back. If I need to finance it, I will tell you how much I'm putting down. Because once the bank offers you more money than the deal are not supposed to tell you to put down any money. Unless the bank tell you that, because it's governed by the Truth in Lending Act. You notice what it's called? Truth in Lending, because somebody was a thief. Right? So what I did now, I said to him, carry it, come. When he come back, he said, all right, they're going to finance it. When he tell me how much, I said, okay. How we reach at that number? A car that I would probably be paying like 4 and change, 5 the most for, he's telling me that it's 6 and change. I said, oh, you get that number? Oh, I said, oh, you get that number? Oh, I have a warranty. And I said, did I tell you I need a warranty? Take it off. When you're buying a car, for the most part, unless it's a super luxury car, do not buy any warranty. But make sure the car is a reliable car. Why? I'm going to tell you why. When you're buying a car, the warranty will always end just about when that car starts to give problem. They know the life of the car. So you will never, ever, ever use the warranty. And I would spend over $7,000 over the life of the car for something that I don't need. When he take it off, the payment went down by $100. Long story short, I tell him, go and get the paperwork and show me all the finance charge. When you're buying a vehicle, when you're buying a house, when you're getting a credit card, every dollar that you will spend must be disclosed to you. Must. If they don't do it, you can go back and rescind the transaction. You can buy a house, and if fraud was committed against you, you rescind the transaction and keep the house. But that's a whole different story. So we are going to discuss the fundamentals and foundation of credit. I walk away and never give them my money because they tried to sell me the $17,000 car for $24,000 with $13,000 in interest. And that's how we end up at $37,000. I said, go, oh, that's what dealers do. I said, they do it to people who don't know they're right. You're not going to do that to me. Keep that car. I don't need it. Foundations and fundamentals of credit. So let me ask you this. What is credit? Let me get the first slide. What is credit? Pay attention to this. Credit is the ability to borrow money, access goods and service with the agreement that you will pay later. That is credit. A lease is not credit. The lease that you pay here for this building is not credit. It is a lease. A lease you pay contemporaneously for the use of the thing while you are using it. Credit is you get the thing and you pay later. All right? That's the difference with the two. And it's important that you understand that. Now, the last sentence is the most powerful in this. And that is why I'm here to give you this information. Credit is what? A tool. It's not income. It's earned through responsible financial behavior. Credit can change your life. If you understand credit, you can change your life. I am not promising you anything, but if you understand credit, you can get rich. That's how powerful credit is. If you understand it and understand how to leverage it, how did you think Trump get rich? Credit. How did you think Amazon get rich? Credit. But business credit is different from personal credit. I do personal credit. Business credit is way more powerful. Because any amount of money you have in personal credit, once you have a business, the bank will give you 2 and 3 times that. You have a $10,000 car, the bank will give you $30,000 in business credit. Why I mention business credit, Pastor Mark? All the churches need to know about business credit. The churches struggle for money. If you understand business credit and set up, that's not my specialty, so don't ask me how you do it. I know the basics of it, but I will not teach it because anything I teach, I know it. If the church set up its business credit profile, and you can do it, go to Dun & Bradstreet, register the church information, set up your business credit profile. Every supplies that you have, you can get it on credit, and when you pay it back, it report, and you keep building. When you get to a certain point, the church can get money without anybody have to sign for it. Because you have set up yourself. That's the power of business credit and why the church need it. And then you won't have to depend on the members to get money to do what you have to do. But the churches don't know this, so nobody is basically setting up the church the right way where it can leverage credit. So credit, if you understand it, you can use it as a tool and change your life. You remember what I tell you about the car that I get with no money down? Right? Not telling you my business. But I'm just showing you as example. I got that on credit. I made more than $100,000 off that car for the life of the car. No money down. You understand what I'm saying to you? And I made more than $100,000 off that car. And other people make money. So it wasn't even me. We probably make $500,000 off that car. No money down. That's the power of credit. If you understand it. People are in the game buying house off credit. Get business credit card, liquidate the money off the card, and put it as a down payment for the house. Refinance the house the next year, pay off the card. That is the game that is being played. But if you don't know, it's not magic. You just have to do what? What did I preach and tell you today? Renew your mind. You have to renew your mind. If you start to change how you think and access the information, your life will change. You understand what I'm saying to you? You don't have to do anything illegal. People who have money, it's not a magic trick. You just need the information and your mind change, because credit can be dangerous. Because you take it and you can't pay it back and you end up in hell. Credit card debt is one of the worst debt to have because of the interest rate, and you end up start go crazy. You see how much people in the church run and buy a house and then their head make start to peel out because they buy it and they never count the cost and can't pay for it because they did not adjust themselves to afford it. So I'm not telling you to be reckless and say, whoa, I can do this. No, do it responsibly. You can use your credit to change your life. You don't just have a good score to have a good score. You have a good score to leverage it. But you got to have this. Your mind got to change. You got to learn what you need to learn. I never know none of this. I learned all of this. All of this I learned. And teach it back now. People pay me to teach it. So credit is a tool. So you use it in order to accomplish job. You put it to work and allow it and be responsible, and you do it. We know what is a credit bureau. We ever hear the term credit bureau? Next slide. You watch my video. Do we know what the credit bureaus are? So the credit bureaus are the people that collect your information and resell it. They are private companies. Most people think that they are with the government. They are not. Their proper name is consumer reporting agencies. There are hundreds, thousands, but it's only hundreds the government publish every year. But there are more that collect your information. Everything that you do is collected and stored and resell. The bank account that you have, once you close it, that information is collected by a consumer reporting agency. And when you try to open a next account, and because you went and default on that account and you didn't pay back the bank, they say don't give him because he's going to default. And the bank say, we can't extend your account. And you're saying, why? And the bank don't tell you that they check systems. That's what one of them is called, that do your checking account, check systems. They keep your banking information. You can dispute it and clean it up. So what you have to do when you have your info, protect it. Every check that you have ever written is recorded. All your car insurances that you have ever had, by Brother Patrick, for the last 7 years, it's recorded. If you have ever lapsed on it, it's recorded. All of that. So that's why when you go to do your insurance, they tell you, we have to charge you a certain amount because you have bad behavior in the past. The word credit comes from the Latin word credo, which means to believe. So when you are extending credit, they are believing in you that you are going to pay them back. So if you don't pay them back, they stop believing in you. When you come to get money, they said, no, we don't believe you will pay us back. You never see credit that way, right? Because you don't understand what credit is. Your credit report, which we will get into soon, is a moral statement about you. Whether or not you can be trusted. So you got to make sure that your behavior is right so that they don't kick you out the system. And where you go and nobody want to give you any money because they say you don't borrow and pay back. Because remember, credit is technically in the Truth in Lending Act and the Equal Credit Opportunity Act, credit is the right granted to receive goods, money, and service and to defer its payment. That's the legal definition. So they grant you the right to get things and walk away. But if you don't pay it back, they tell on you. And they tell on you on your credit report. That's why the lender goes there and pull it to make sure that can we trust him. And if the report says no, we can't trust him, they say we're not giving you anything. Right? So the consumer reporting agencies, we call them credit bureau informally. The three major ones are Equifax, Experian, and TransUnion. Those are the biggest ones. You can invest in them. You can buy their stocks. They control your information and sell it to the banks. Every time you apply for credit, they make money. Because the bank has to buy the report from them, and the bank also has to buy the score from them. So they get paid twice. Once you go and apply for credit, they get paid twice. You and them have no business relationship. They just collect that info and have it there. Anybody who wants it, they sell it to them. That is why you have to control the information. So the game is being played. You got to make sure you are playing your part in the game. You understand what I'm saying? You don't know the half of what is being done with your information. And I never understand that until I get into this game and really study it. Your credit report is just one form of reports. That's just one. Next slide. So we know what credit is, and we know what a credit bureau is, correct? The reason why it's called a bureau, the historical meaning of bureau, it is a repository that collects information. That's what bureau really means. That is originally what it meant. What is a credit file? A credit file is the digital record of your credit history maintained by each credit bureau. You have more than one credit file because how many I gave to you just now? TransUnion, Equifax, Experian. Each of them have their own file. They're not related. They're independent companies. So whichever furnisher, which is the creditor or debt collector, share with them, they have that. Now, we say digital because everything now is computerized. Back then it wasn't. Back then it was big rooms with paper. But now it's digitized. Each bureau creates its own version of the data from lenders, debt collectors, courts. So if you have bankruptcy, if you have judgments against you, they collect that. Back then, up until 2019, they used to collect tax liens. So if you owe the IRS and the IRS put a lien, they would have it there, but they stop. They stop collecting that. But the judgments, all of that, public records, bankruptcy, they get it, they have it. Once you have a bankruptcy, it's hard for you to get anything. Very hard. Very hard, but you can get it off. It's not easy, but it can be taken off. So your credit file is all the information that they have on you. What is your credit file? All the information that they have on you. Why I'm telling you that? Next slide. Next slide, please. Credit report. Your credit report is a snapshot of your financial behavior. It details your credit accounts, your payment history, your credit inquiries, whether you're looking for credit all over the place, they tell on you by giving the inquiries and public records. What did I just tell you previously? Your credit file, right? And now I'm telling you about a credit report. Your credit report is built from the data in your credit file. Your credit report has a statute of limitation attached to it. Negative items outside of bankruptcies, if you don't dispute it and get it off, stays on your credit report for 7 years. Bankruptcies stay for 10 years. So your credit report is the data that they have that falls within that 7 to 10 year period. But the file is more information than that. How they can access information that is beyond the 5 or 10 if a employer, a creditor, an employer, this is for employers, our insurance company, how they would see information that is beyond the statute of limitation is if you are buying life insurance, that is $150,000 or more. Or if you are getting a job that pays you $150,000 or more, they can show them information on you that is older than the 7 years. Negative information, that is. Because positive information just stay there, just keep staying there. Positive information that is closed might last for like 10 years or more. But negative, 7 to 10 years for bankruptcies. That is your credit report. So your credit report is a snapshot of a data that is within the statute of limitation. We understand the difference. You need to control what is in your report and your file, because that tells people who you are. And you need to monitor it, because sometimes things will be there that are not supposed to be there and you are damaged by it. But once that happens, you can be compensated if you know your rights. Are we understanding and rolling? We're learning? All right. Next slide. What is a standard credit report? What is it? How many of you have seen your credit report before? How many of you have seen your credit report before? How many of you? Most of you have never seen your credit report. So a standard credit report, this is how it is structured. At the top, it's your personal identifying information. Your name, your social, all the names that you have and that you have ever used, the name that you give to Comcast, the name that you give to DirecTV, the version of your name that you give to Capital One. Not good. The more names you have there is the more you appear unstable. Or you look like you're a con man. Because remember what the credit report is. A moral statement about your financial behavior. So if you are using so many names, why is it you are using so many names? That's what the creditor will ask. You understand? If you are married and you have accounts in your premarital name and then you have accounts in your marital name, that's okay. But try and keep one name on your credit report. The next thing you will see is your addresses. Everywhere that you have ever lived. You want to keep one address on your credit report. If you can. They will try and tell you that we have this address because creditor gave it to us. You don't want that. You want one address. Why you want one address? Based upon what I just tell you. Stay that you're stable. You don't look like you're a nomad. I look like you're all over the place. Your information, because when they're looking at your credit report, it's not just your score. They're looking at how it looks and what you have there. You can come in, right? I know of people that have 700 score and couldn't qualify for a vehicle because they didn't have much on their credit report. And someone with 500 and odd score and get the vehicle because they have their profile built out the right way. So it's not just your score. I will deal with that when I come back the next time. I'll show you what you need to have there and how to do it. So after that, you have accounts. The accounts that you have. Your credit card, your mortgage, your student loan. That's what you will see. Then you will see collections account. What are collections accounts? Collector looking for you to take back the money. Or the creditor sell it to a collector. Or in cases that I document in the book that I just published last week, thief in debt collectors make up debt and put it on your account and then fight with you to pay them. Whole different game going on out here. So once a debt collector call you, you don't just tell a debt collector that, yes, it's me. Find out how the debt collector get your information. Because you have debt collectors that is robbing people. You're talking about spiritual wickedness in high places? Oh, yes. Scamming at the highest level. So that's collections account. And then if you have bankruptcy or judgment, you're going to see it. What are odd inquiries? We know what are odd inquiries? When they run your credit. So when you apply for credit, there's two kinds of inquiries, soft and hard. Soft, they just get a snapshot of your report. They don't dig into the report. The hard inquiry, they dig. They have to put the hard inquiry there because the hard inquiry is tied to your right to privacy. Your consumer report is a highly sensitive document. No one should access it unless you authorize them. You have to give consent for them to see it. If they see it or get to it without you giving consent, you can sue them because they have violated your right to privacy. The hard inquiries tell you who have accessed your report in the last 2 years. That's what the hard inquiry is there for. It's not just to say when you apply for credit. It's to tell you who did it. So if you see hard inquiry there that you didn't do, that's fraud. And as a result of it being fraud, you can get it off. Because the more inquiry you have, is the less likely company is going to give you money. Because you look like you're desperate for money. Because remember, inquiry is when you apply for credit. So if they see a lot of them, what it looks like, you're applying for credit all over the place. And if you're applying for too much credit, what is that telling me? You're in a money problem. You're in money problem. You see how it's telling a story that you are not thinking about? So you make sure you control that. You don't want more than 4 on it in the last 2 years unless you legitimately get them and you're just going to sit back and wait to leverage it again because we do that sometimes. Get as much credit, sit back for 2 years, get them off, let them drop off, and then you run the game again. You understand? But once you have more than 4, the banks don't like you. You can have a 700 credit score. And if you have 5 or more, Chase is not going to give you. Not going to give you. Because you might be in problems later down the road because you have overextended yourself. That's what your standard credit report looks like. Next slide. What is your credit report? What is your credit report? I just tell you. Exactly, and a snapshot of your credit file. What is your credit score? Yes. Depending on the one that you're looking at. You have many credit scores. Many, not just one. Your credit score, how many of you thought that your credit score is your credit report? Let me see your hand. Who thought that your credit score was your credit report? Prior to me discussing this. Ignorant of most of it, so it doesn't matter. Doesn't matter. Your credit score is a numerical data, 3-digit, that predicts how likely you are or not to default within the next 90 to 24 months. That's what your credit score does. It is telling the... No, it is. It is telling the lender whether they should trust you. The higher the score, it is telling them that you're not gonna basically default in the next 90 to 24 months. The lower it is, it's telling them that you might default because your score is an aggregate of national behavior with people with a credit profile that's similar to yours. That's how your score is calculated. It pulls data from other people throughout the country that has a similar credit profile and make a prediction on the basis of their behavior. So it's aggregated collective behavior. That's what your score is actually doing. So the higher your score, it's telling them that you're not going to default. The lower your score, it's telling them don't trust him. Your credit score is generated from the data in your credit report. So the scoring model reads the data in your report and then give a number. So if you control the information in the credit report, what do you do with your score? You control your score. So it's important for you to understand what's in the report and how to control what's there. Because you will control what the score looks like. It's the data in the credit report the score generates from. So if your data is not good, your score is not going to be good. If your data is good, your score is going to be good. So your credit score, your credit report, what does your credit report predict? Your credit report predicts your past behavior because it's telling them how you have paid back over time, how much credit you have gotten. So your credit report is telling the story about your past. Your credit score is predicting your behavior in the future. You see what's going on? So both of them is telling a story about you. One is telling the story in the past, and one is telling the story in the future. And what you want to do is make sure you control the one that is talking about the past so that I tell good story about the future. And that's by controlling the information. Any question? Any question? I'm clear? How am I doing? How you behave with your money, your payment, all of those things. I will teach you that next time I come. And also control the information that's there because that's why I exist with credit repair. You behave bad in the past and then I get rid of it for you. You understand? So you tell a different story that it wasn't so bad. That's why they don't like us. The bank don't like us. The credit bureau don't like us. Because they're in the business of doing what? Collecting data to mitigate risk. The credit bureau is in the business of selling data to give a proper picture. We as credit repair companies in the business of taking away data. You see the adversarial relationship? Me. You weren't here earlier? I am Pastor Barrett, the preacher man. Go ahead. Credit repair company, that's what I am. I'm going to tell you at the end. I'm going to tell you how to get your report for free, and I'm going to tell you how to check your score. I'm going to give you all of that.
I have a online account.
And it show you your score.
So can you break down the
Yes, ma'am. And that score that you see might not be your FICO score. I'm going to tell you that, man. Different score matters. I'm going to tell you. Don't worry. I got you. It's a legitimate score. But it's just a different kind of score. I'm going to show you when we get down. It's a legitimate score. Some lenders use it. But FICO is the mastermind. Vantage, less lenders use it. 90% use FICO. But I'm going to explain the difference to you. Yes. Fair Isaac Corporation. They build the algorithm that gives the credit score. The credit bureau don't own the credit score. The credit bureau license the score from FICO. So every time the credit bureau sells the score, FICO get paid. And every time somebody pull the score, the credit bureau get paid. And every time you give them information, they laugh because they get rich off your information. So you have to control it. What is your credit score and credit report used for? Next slide, please. So we understand what the score does, right? Are you getting it? Go ahead. The credit report? I'm going to tell you how to get it for free. You can sign up at Experian, TransUnion, or Equifax for free. They're going to try upsell you, meaning tell you that you can pay for the monitoring. You don't need that.
So is it different from, because I
Vantage score. I'm going to talk about that. Vantage score. Both of them using the same scoring model. I'm going to talk about that later down. That's not your FICO. That's a Vantage score. Less lenders use that than those who use a FICO, but some do. What is your credit score and credit report used for? Lenders use it for approval and they determine the rates that they're going to give you. Right? So that means your score affects your money. Your score is bad, it will cost you more money to access credit. Your score is good, it costs you less money to access credit. So you need to have a good credit score. You need to. I'm going to tell you further down. What I'm going to do, let me press on, and then I save the question for last because most of the questions will be answered here. Not your fault, it's my fault. I teach by interaction, and I can't help myself. So but just let me go on, so and then I will let you ask down the road. So lenders use it to deal with your rates and how much they want to extend. Landlord use your credit report. So your credit report doesn't just have to do with money. You remember what it says, goods or services? But landlord doesn't just use your credit report. Landlord use several consumer reports. The most sophisticated landlords. They use a background screening consumer report, which tells your story of whether or not you're a good behaving boy or girl, or you're a criminal, or you had a misdemeanor, or you had a felony. They have also what is called a tenant screening consumer report that tells your story whether or not when you live into other people's house, you pay your rent, or whether or not they had to evict you. So the landlord is running at least those three. They are trying to see your moral character if you're a criminal or not. They are trying to see your financial behavior, whether you can afford to pay or not. And they are also seeing your tenant behavior, whether you are somebody that deal good with landlord or you were evicted. So there's multiple consumer report that being run on you. How many of you here own homes? Don't put up your hand. How many of you here rent to other people? Not rent from, but rent to other people. This is what you need to know. If when they are renting from you, listen to this carefully. I need to give the church this because most of you don't know this. If they are renting from you and you use a consumer report to determine whether or not you rent to them, and part of your decision not to rent to them was based on the consumer report, or it was solely based on it, once you did not rent to them, you have to give them an adverse action notice and tell them why you did not rent to them. And you have to tell them where you get the negative information from that caused you to make the determination not to rent to them. Most landlords don't do this because they don't know. If you get somebody like me, like what the dealer got this week, that know this, if you don't give me that and it was my credit, I can get you to pay me $1,000 because you violated my right under the Fair Credit Reporting Act. You have to give the adverse action disclosure. You know what an adverse action disclosure is? You know what it is. You just never know that you know. When you ever apply for credit before and they deny you, you notice they shoot you an email right away and say, we didn't give you because your credit was so-and-so, and we get information from Experian. And or they tell you that we deny you, but check the mail, in a few days we'll give you. That's an adverse action notice. They have to tell you. There is two, once it's credit, that they have to give you. One is governed by the Fair Credit Reporting Act that tells you whether or not your credit report had negative information, why they deny you. One is governed by the Equal Credit Opportunity Act that governs discrimination. They have to tell you why they deny you. It cannot be vague or general. They must tell you specifically why they deny you credit. Because lenders were using people's gender, their race, their marital status to deny them. And the government said we can't have that. So the adverse action notice plays a role in telling if they're discriminating or not. So once you have, and you can get it, you can get the two notice in one. But there's two. One for discrimination and one for whether you have negative info in your credit. Because why? You might have negative information and never know. And you were disadvantaged by it. So the government says, inform the consumer that something work against them that they never know. You know the system better than they do, so you tell them. See what the government did? That's why you have that. So once you apply for credit and you were denied, you must get this. Once they tell you, go and take care of what they tell you. And you might be able to go back and get it. So landlord use it. Insurance company use your credit report. They can't use it for anything outside of underwriting. When they're issuing insurance, they can use your credit report or a consumer report to underwrite it. They can't use it to determine anything else. Employers, use your consumer report. How many of you apply for a job and they pull your credit? How many of you apply for a job and they pull your background information? Huh? Yes. Brother Patrick, when they pull your background information, did they give you a form separate from the application? Good. Once they're going to use it, they have to give you a form that is separate from the application. And you have to authorize them to run the background check. They can't do it behind your back. If they do it behind your back, they have violated your right to privacy. And you can sue them over it. Because they have invaded your privacy. Same thing, all of that, because it's background. They have to tell you. All right, there are 5 types of credit accounts. Let me move fast, because I see some of you getting weary. 5 types of credit account. We have, next slide. Yeah, this one, sorry. Revolving. Do we know what revolving credit accounts are? Your credit card. You spend and it keep going back. Spend, keep going back. Line of credits, which is cash that you spend. Once you pay it back, it's back there and you can use it again. That's revolving. Installments. We know what installments are? What are installments? Mortgage, car payment, any form of personal loan. Then we have charge card. Do we know what charge card are? Some store cards are charge cards. Not all charge cards are store cards. You need to know what this is because this can damage you if you don't know the difference. How many of you are familiar with American Express? When you use American Express, what must happen? How much of it you have to pay back? That's a charge card. So a charge card, you can't carry a balance. You have to pay back the entirety of what you use by the due date. If you don't pay back, it damages you really bad. A regular credit card, you can carry a balance. But a charge card, you need to pay all of it. So you need to understand the difference. So you don't get a charge card and then you end up use it and think that you can just pay a part of it. No, it will damage you. You have to pay the entire thing. Then we have service credit. What is service credit? Your cell phone, your light bill, your utilities. That's service credit. It's credit they are extending to you by way of service. Remember what the definition was? Goods are service. That's service credit. And then an open account. I use this name, but this is not the full name for it, but I use it so it makes sense. Just like how I define credit for you without the technical language. Do we know what an open account is? Most of us not going to know because we don't have that kind of money. An open account is a credit card that you get that doesn't have a limit. So if you look up the American Express Black Card, that's a card that you can spend 100,000, 200,000, $1 million on. But they would have to know your net worth before they give you a card like that. You understand? And then the annual fee is crazy. So that's an open account. It doesn't have any limit. So you have to get into a certain level of income, and they give you. You see what I tell you about the power of credit? Willing to give you that kind of money with no limit. No limit to it. You buy anything you want to buy. They know you can afford it. Corporate, yes, because they have the money. Are we following? Or it's too much? We're learning. So that is the 5 different kind of credit. Now I'm going to give you, let me speed up. What are the 2 classifications of credit accounts? There's only 2 type of credit accounts. Next, yeah, you're there. 2 type of credit accounts that appear on your credit report in terms of classification. Revolving and installments. You need to have both on your credit if you're going to build out a good credit profile. You need an installment and you need revolving. If you don't have them, it's going to disadvantage your credit profile. Installment, mortgage, car payment, so on, a student loan, so on and so forth. There are 2 main type of credit scores. Remember, we discussed this earlier. Credit cards and line of credit. So revolving are those that you pay and the money becomes available to you again. So it's revolving, it's going in a circle. And so most of us only familiar with the credit card because we are not familiar with line of credit. You need to start leveraging line of credit, especially if your credit good. Take the line of credit and have the cash sit down. Line of credit is the bank extend credit to you by way of cash. So they might say, I'm going to give you a line of credit for $50,000. And they give it to you and it's there. When you use it, you pay interest on what you use, not everything. So if you only use $1,000, you only pay interest on the $1,000. And once you pay it back, you have back the whole 50 grand instead of 49. Most of you that have homes, you can access the equity in your house by way of a line of credit. The bank give you access to the money that's built up in your house by way of line of credit. But if you're not responsible, don't do it. Because if you don't pay it back, the bank can end up getting involved with your house and you lose it if you don't know what you're doing. But it's not only that you have personal line of credit. So that is good for cash flow. If you run business and you don't have cash, line of credits are good because you can use it to pay your employees. You understand what I'm saying? You also have my God. Banks issue it, but listen, the best lenders are not the big banks. The best lenders are the credit unions. Much more better in terms of how they deal with you. The underwriting is less restrictive, and they have more products that they give you access to than the regular bank. So you need to start to become friendly with credit unions. And the interest rate is better than the banks. As a matter of fact, most credit unions, you have several of them. You can have $5,000, $6,000, $7,000, $8,000, $9,000 right away. Take $100, open. You have $1,000, open 10 of them. With different credit union, just move a little bit of money through them. Most of them will give you $500, $1,000, $2,000 in line of credit within a month or 2 of being with them. And say you have 6, 7 of those. How much money that you have access to? 7, 8 grand you have access to, and you just put out $1,000 to build a relationship. See the power of credit? You see the power of credit? Yes, on the account with the credit union, only with $100. Now and then you pay a bill from it, you do something from it, so they see that you are doing something with them that is responsible. Most of them will give you a $500, $1,000, $1,500 line of credit. You have 10 of these, you have over 10, 15,000 sitting on. You can leverage it and do stuff. You have cash flow, so you don't stuck. You run into problem. You have to be calling somebody, telling them your business that you need money. When you can use your credit or just build relationship with the credit unions and get access to this. They don't like you. Because you're not allowing them to make money. Money is currency, got to be moving. The bank make real money by creating debt. Debt is what create money. Because the bank just give out a digit in the computer and say, we give him $500. That's not real money. It's when you spend it, it become real money. Because now you have to pay it back, and you have to use your real money to pay it back. And then they make interest on it. So now they have more than the 500. So debt creates money. So if you know how to leverage debt, you can create money. Not good. So let me answer the question. Both of you ask the same question. They're gonna take it back. And if they take it back, it's gonna damage your credit. Because one, it's gonna affect the age of your credit. And the age of your credit is responsible for 15% of your credit score. And if you actually take it back, your debt to income ratio will be affected too. Not good. It's better than if they close it, because then because in your credit report it will be noted who closed it, whether it's you or the bank. If it's the bank close it, it might mean it's tell the story that something might be wrong with you. That's why they close it. If you close it, it tells the story that something might be wrong with the bank. That's why you close it. You see what I'm saying? Because it will just notate who closed it. Use it and pay it back. Use it and pay it back. Use it. You have the cash, especially if it have rewards on it. Use it, pay it back. You have the cash. Just use it and then just use the cash and pay it back. Especially if it had rewards, because now you're adding things to yourself that you never had. That's a gold mine. Those kind of cards are gold mine if you know how to leverage them. If you know how to leverage them, you can make money off them by spending the same money that you would have spent anyway in cash. I'm hearing myself. Go ahead, my brother.
Okay, so I have a credit card. I actually consolidate, do some form of consolidation with another card and paid it off. And because I didn't
Balance
understand,
transfer.
yeah, because I didn't understand a lot about credit cards, I decided I was not going to use it again because, I'm having problems and interest is high. I went on my account the other day and I noticed they closed the account. They closed that particular account. And I don't know if it affected my score.
It did.
Yes or not.
It affects your utilization, it affects the age of your credit.
Well,
And the utilization is 10%. Hmm?
I have a credit card that is older than that one.
Yeah, but your credit still re-age. Because your credit age, which is 15% of your score, is the average of all the accounts together. You understand? It might not affect you bad because once your score once your age don't go under 7 years or so, it don't really lick you that bad, but you're gonna see your score drop. And it affects your utilization, which is 30% of your score. You close it with a balance?
There was no balance.
All right. That is the other thing that let me not get into the second presentation. Let me not do that. So that when I come back, I'm regurgitating, because I'm covering all of that in the second presentation. All right, let me press on. I want to wrap up this in 15 minutes for you. So you have two kind of score. FICO, Advantage. FICO is the one that 90% of lenders use. And what I say score now, I'm talking about the algorithm that is reading the data in your credit report. Right? 90% of lenders, you have several FICO scores. You don't just have one, you have a lot. When you're buying a car, they use your FICO Auto. When you're buying a house, they use the one for mortgage, the older version. And credit cards, they use another one. So you have a lot. Now, Vantage is the scoring algorithm that the 4 credit bureaus built to compete with FICO. I remember what I said? They license the score from FICO. So they want to claw back some of their money, so they build their own score to battle FICO. But people trusted FICO more than them. Because this came about in 2006. FICO exists from the 1950s. But the score really become known and more powerful in the late 80s, early 90s. Especially when mortgage exploded and expanded, where more people could buy a house. So FICO stands for Fair Isaac Corporation. Vantage is controlled by the credit bureaus. Experian, Equifax, TransUnion, and one that is called Innovis. Most of you have never heard them before. They control that score. When you look on your Credit Karma, it's a Vantage score you're seeing. And credit-wise, your Vantage score. Some of the credit bureaus Vantage. Experian, you're seeing FICO. So that's why your score look different. When you look on Credit Karma, you say, oh, I'm impressive. And then when you go over and look at your Experian, the score is less. Or it's more. It might be more because they use different percentage for different segment. Each of them use different percentage. So that's the 2 type of score you have. So that's why your Credit Karma looks different from some of your other score. Because they are using Vantage. So one is driving a BMW, one is driving a Benz. But you're still in a car. 2 of them is legitimate car, but they are running on different engines. Make sense? That's a good analogy. Go ahead. Hold on. I'm going to take your wife and then I take your shoes. Isaac. Yeah. Isaac like Isaac in the Bible. Yeah, Fair Isaac Corporation. Go ahead.
When I go on Credit Karma, the same score that I have there, when it do chip it over, the same thing giving it from
TransUnion and Equifax. Yeah, so they're using the Vantage. Credit Karma is not really showing you your score, you know. Credit Karma is an affiliate marketing company that use the score to lower you to get things from off the website so they make money. All those things that you apply for through their thing, they make money every time you do that. Because all of those companies, they're affiliated with them. And when you use the link, they pay them. Yes, that's what they do. That's why you don't notice every time something they tell, come over here. And they tell you, I give you $50 if you apply for this because you have to get it. Because if you apply, they're going to make more than 50 and they don't have to give you the 50. They already have the data and know whether you will qualify or not. Because the lender that they're working with tell them what they're looking for. So it's a game. All right. What your score is made up of. Let me run this fast. Your credit score is made up of 5 segments. Right? 5. Your FICO. Go down to, not the Vantage. Vantage of 6. Let me do the FICO because the FICO is the most important one. Yes, the FICO. Go down to the chart, the next chart. That's it. So I take 1 stone and kill 2 birds. This is the segment of how your FICO is built. Right? This is it. Your credit score is from 300 to 850, your regular standard credit score. 300 is given to you. You don't have to do nothing. You can't affect the 300. It's the 550 you control in how much you get out of that. Your payment history is the most important. Because remember what credit is. They're giving you and testing if you're going to pay back. 35%. That's responsible for 192.5 points. So if it's not 100, your payment history, you are losing right there. Your utilization, which is the second segment. So these are the 5 segments that control a credit score. Your utilization is how much credit you have on your revolving accounts. Because this controls your revolving section, not your installments. Because your installments is a set amount with set payments. Your revolving is what you keep using and going back, which is your line of credit and your credit cards. 30%, 165 points. You want to keep that low, under 30%. If you keep that low and have 100% payment history, you are in the 650s, just with those two. Then the length of credit, which is how long you have established credit. The longer you establish credit, what is it telling the creditors? You have experience with managing credit. Nobody wants to employ anybody that doesn't have experience. So the creditor like to see that you have had a history of managing credit. That equates to 15% of the 550, 82.5 points. If you control those three, you have a 700 score.
So why did the college credit card, when you go to college, they offer you credit cards. They want to keep giving you credit cards, and you don't have any credit.
What did I tell you about making money? Debt creates money. And the underwriting process for a college credit card is different from the underwriting process for a regular credit card.